Ladies and gentlemen, I'm not trading. I've done my trading and I'm not interested in any of this madness that you are seeing right now. CPI coming in line with expectations, but CPI is not the problem. We know it's sticky. When inflation data comes in line with expectations, what is the real problem? Well, it's your labor market. 265,000 unemployed claiming benefit people rolling to the welfare, seeking those checks. That is bad news for your economy. Bad news. Inflation is not the problem. The sheer fact that if you go and listen to the Jackson Hole Symposium, Powell said that they're more concerned about the labor market. Well, they've got that flavor coming into play right now. When the labor market starts to struggle, it only calls room for recession. That's what happens. The economy is starting to slow down. Why are these people claiming benefit? The only industry that's working right now is the AI market. That's it. And who do you think's working that? AI. There's a clear slowdown, and that's a problem. We've seen what's happened across the board, ladies and gentlemen. Bitcoin makes a nice little sweep up and down. Nasdaq's been treacherous. The yields are sinking because they're pricing in the idea of rate cuts because the inflation hasn't gone up. But it's a tricky one. But I'm going to hopefully help you make sense of it today. No, ladies and gentlemen, we're not pulling out the board. We might pull out the board. I don't know, man. It all depends on the type of question that you ask. And if I need to deliver it on the board, then I will put it on the board. I got myself a digital one, by the way, just to make it easier for you, make it a little bit more interactive with the learning and what have you. So I'll be getting that set up as and when Sam arrives and sets it up for me, because I know I'm going to do a great job of probably wrecking that. But anyways, no, I can really do it. But I'm the kind of guy that's like, if Sam can do it, then he can do it. He's the best at it, you know? Anyways, let's get with the program, ladies and gentlemen. Yes, we're dropping the black shirt today, but who said that? Rate drops will not fix jobs. Not this time. He's got a point. Yeah, rate cuts are not going to... Look, the problem that we've got is liquidity's already been... It's already been absorbed. You're increasing the debt ceiling. Look, go back and watch the first cabinet meeting that Trump had with everyone. The first one. Bessent said, we don't need to worry about credit or the debt. We've just increased the debt ceiling by another 2 trillion. So we don't have to worry about it for the next couple of years. Okay, then. All right, cool. Just keep on printing that flavor. Let's break it all down, ladies and gentlemen. Here we go. So today, well, I mean, look, this was the logic. This was before the news came out. Says here, okay, that most traders had fully priced in the idea of three rate reductions in 2025. This was before the CPI data and after the PPI reading. Okay, that's important. Now let's go and have a look at where we are with those metrics. I refreshed it a few minutes ago. It's now at 89.1. Let's see where investors' heads are at right now with the rate cuts, because word on street is there's now 4 rate cuts coming into play. 89.1. That was at 92 this morning. So it's now scaled back a little bit. It just goes to show that investors are kind of getting the idea that maybe inflation is here to stay, okay? We need to look at where we are in October. They're looking for 4 rate cuts. Ladies and gentlemen, we're in September. I mean, it's going to be a pretty aggressive one. By October, it says that we're going to be at 3.754%, okay? Going into December itself, we're going to be around that 3.5, 3.75% region. Now, do you think that that's going to work with debt being so high? US deficit is still climbing, ladies and gentlemen. That is a problem. And now you're going to get corporate refinancing coming into play. If we go and look at the unrealized bank losses, okay, back in September 2018, when the market did crash off the back of that, okay, when finance got refinanced at that time going into the third quarter, that's what caused the market to drop, because they had declared that they were at loss, right? So everything started to pull back. Well, we are here right now. And back then in 2018, the unrealized net bank losses of profit and loss of banks' balance sheets in terms of investments, that was around 250 billion. It's now at 560 billion. So what caused the market to drop in 2018, it's not going to cause it to drop in 2025, even though we owe double. Banks are doubly exposed. But this time is different, isn't it? They always say it, ladies and gentlemen. Let's quickly go over to the marketplace. Bitcoin did all right. Hit the high, hit the low. And it's gone nowhere. Wonderful. That's what Bitcoin does. But I'm going to be revealing to you a chart very shortly. So if you're into crypto, make sure you're sticking around because I'm going to give you a breakdown of a chart on why the altcoiners are probably going to get their heyday very soon. So just sit tight for that. Let's quickly break it all down and understand where money's going, right? 2-year yield takes a little bit of a spike up and down. It's an indecision right here in the sense where investors are like pulling money out of the bonds, going back into the bonds. They don't know, okay? 2-year yield trading at 3.5%, 5-year coming in at 3.57. So you've got the 2-year and the 5-year practically nearly at the same level. So it does look what problem that is. You've got a term 2-year, okay? The yield is at 3.51, and then you've got the 5-year at 3.57. Is there an inversion starting to come into play? So if you give the US government $10 million on a 2-year, okay, you are fractionally earning less than what you would be on a 5-year. Something's not right, okay? You should be going into longer term and earning more, but you're only fractionally earning more. Doesn't make sense. It's like the 10-year right now, 4%. Why is that getting lower and lower towards the 2-year? Because if investors, then hear me out with this. If investors start to plow into the 2-year and not the 10-year, you've got a problem. That looks like it's cause for recession. That looks like the future doesn't look great. Now, I'm not coming with all doom and gloom, ladies and gentlemen. I'm trying to get you to understand that the market operates in 2 ways. Expansion, contraction, simple as. That's all it's doing. And I keep getting phone calls. Why do they call me? Anyways. Expansion, contraction. I'm not going to get the chart out. But I'll bring you the board. Here we go. Here we go. Where's the board? Look at this. Right? For anybody that doesn't know, okay? Expansion means up, all right? Contraction means down, right? When you have been expanding for a period of time, what usually happens? There's a little bit of a reset. How about we put this into perspective? 2007, 2008 subprime mortgage crisis. What was the economy doing before that? It was expanding. And how many months was that? 256 or something like that. That is a bloody long time to expand in an economy. But we've got the same thing happening right now, ladies and gentlemen. The US economy is expanding, but it's now getting to a level where it's starting to stall. Sort this. I didn't practice this. Anyways, back into it. 10-year yield going down. Logic says that the stock market should be going up. It's not really doing much, is it? Nice little wicked. And then it comes straight back up, okay? They're not bothered about inflation. That is clear as day. When inflation is at normal level, it's now investors are betting the idea that they're going to bet for 4 rate cuts. Hold on a second. Fundamentally, historically, every time the Fed pivots, the market corrects, okay? There's fatigue in the stock market. Let me explain. Look at this. Yesterday's statistics on the stock market showed that NASDAQ, S&P hit new highs amid giant Oracle, okay? Oracle has smashed it yet again. Let me just bring that up for you. Here we go. Oracle, look at that. Goldman Sachs yesterday, or the day before the market opened yesterday, Goldman Sachs had put a price projection and said that in the long term, we expect Oracle to end at $340 a share. The price expectations. Well, it hit that the day they actually announced it, and now it's trading 1.62% positive, okay? So it's already jumped nearly just shy of about $5-6 or so, and it looks like it's not going to stop. What industry is it? AI. Well, not AI, but it's tech. It says that develops database, middleware, and business application software and hardware systems for enterprises, okay? I do believe it's on its way towards $1 trillion. You're going to have another stock in the tech market that is succeeding $1 trillion. 417% in debt. That's no good. All it takes is for interest rates to stay higher for longer, and that can be a problem for Oracle in the future, okay? So always be mindful. If you're going to invest in a company that's a tech-based company, just remember that tech is prone to changes in interest rate yields, okay? So the higher the interest rate is, the worse it's going to be for that company to do business in terms of taking money. But at $1 trillion market cap, you can't, nearly $1 trillion, you can't really complain that these guys are going to have a problem. They've been around for so long. I mean, if we just look at the monthly, you can appreciate that these guys have been around from day one, okay? But they are now just doing great at $226 a share. And, well, no, that doesn't make sense. Why did the monthly come up with that? Oh, there you go. Yeah. So it's up now 45%. Volume's coming at 160%. There's people buying this bad boy, and they are taking no prisoners. Okay. So tech is doing great. Oh, there's your gap up, ladies and gentlemen. Don't know why it's done that. I don't know why it's done that. But anyways, let's get to what we're really talking about right now. NASDAQ. Let me break it down for you. Yesterday, NASDAQ closed on volume above average, okay? It was only up by 3%, so it's not that great. And when I say that buyers are becoming fatigued, you can see that. It's just slowly climbing, all right? But we haven't had rate cuts just yet. Now, logic says that when the yields go down, that is equally welcoming for the stock market, especially the tech market. Tech market has been fueling all these moves to the upside, not other industries, just the tech market, all right? But when you're looking at the volume down here, it's not above average when it should be when we're breaking out to the upside, okay? That's something you've got to take into consideration. When we look at stocks that are breaking out, so from yesterday's price action, when NASDAQ did make a nice little move to the, made a move to the downside, of course, okay? But it did manage to recover itself. Look at the stocks that are breaking out, right? You've got two stocks that want to break out, and what stocks are those? IESC, which is a building maintenance company priced at $381, average volume 143,000 shares, and it's not really got that much market cap, okay? Nothing great for me, okay? Next one, Smart Stop. Here we go. Finance Property, right? Premier owner and operator of self-storage facilities in the United States and Canada. Not been around for too long. Zilch market cap, nothing great, and its average daily shares of 516,000. What's that telling you? It's telling you that the stock market breaking out is not with companies that are doing the big business. Oracle is an exception, okay? But you really need more tech companies breaking out. That leads me over to our dearly beloved NVIDIA. Where's NVIDIA at? Hold on. I'm going to get to cryptocurrency in a split second. Wait there. All right, what's NVIDIA doing? Pulling away from its highs, okay? And the volume itself on NVIDIA is and always will be the best. 170 million. Look at that. It's wonderful right there. On the weekly, it looks like it's getting ready to break out. 16% from its pivot in 12 weeks, but volume is disappearing. How many of you are divergence traders? Just that alone. It's rising on dead volume, okay? It's not ideal. We want it to be rising on strong volume. The volume at the highs is higher on the negative side, so it's distributing, okay? So that's something you've got to take into consideration when you're looking to buy stock, all right? Now, going into it all, to put it into perspective, Bitcoin. So Bitcoin's pulling back. It's unfortunate, but it looks like it's pulling back to a very interesting point in the chart. Now, let me explain something to you, okay? This chart right here is going to put things into perspective for the altcoin holders and what have you. This chart shows you the percentage of cryptocurrencies with a 10-day rate of change of minus 10% or greater. In other words, how many cryptocurrencies have been taking a nosedive. It doesn't matter how many. What matters is there is a lot of altcoins, okay, that are trading in what this suggests, pessimistic zones. So there's been a lot of altcoins that have been pulling back, okay? So what we've got to look at is say to ourselves, okay, how many altcoins are trading at these levels? Well, if you just correlate it to the chart itself, okay, when this... What are you doing? What are you doing? Come here. When this starts to rise, okay, that starts to rise, price also starts to go up. So when this starts to rise, price starts to go up, but we're starting to see a different story here. We're seeing that price is rising, but that isn't. So that means there's only a few participants leading the market. So that could effectively mean that in the future, we could start seeing altcoins making some significant moves. going over into the altcoin market to put it into perspective on where we are with the totals chart. Total market cap for the altcoins is showing that 90% of them are pulling back to the 50 EMA. But what we're looking at right now is there is a nice trend happening. This is the exclusion of Bitcoin and Ethereum. Most altcoins are making nice movements to the upside. BNB is making all-time highs. It's looking great, isn't it? Okay. But what you got to look out for here is you got to look for the altcoins. I've said this before. Look for the altcoins that are trading below the 50 EMA. Okay? Because the altcoins that are trading above the 50 EMA and now moving down towards it have already done their move. You're looking for the altcoins that are sustaining themselves below the 50 EMA so that when price does retrace into this 50 EMA and then the majority of altcoins find support at moving averages, the logic says that those below the 50 EMA or the moving averages will also start to pick up suit and start moving higher as well. That is a simple way of breaking down the logic of a trend across a large asset class, okay? There's way more to it. You've got to take into consideration who's buying it, what order flow's going on. Is there anything changing in the industry itself, on the altcoin, what's happening, okay? But this is as a basic level to go in and say, all right, where are we with altcoins? Well, they're all pulling back. The altcoins you want to be looking at are the ones that are trading below moving averages. But statistically, it's showing that we are at a point where we can naturally expect altcoins to start moving back up. That's all going to be based on what investors do with cryptocurrency or Bitcoin overall. So Bitcoin dominance looking like it's basing out, ladies and gentlemen. There is a possibility Bitcoin dominance is going to move back up. And I do have a price projection and it might be a bit of a problem for you all. But I do expect dominance to succeed the 70% mark. I really think it's going to happen. And I think it's only going to happen when we get an event. I think Bitcoin is only going to make that significant move that everyone is waiting for when the event happens, whether it be a black swan, whether there is a collapse somewhere. Because I don't think Bitcoin is going to react to a Fed pivot. No, that's a cyclical thing. It happens all the time. Black swans do happen, but you don't know when they happen. And I think the next black swan is going to have a massive impact, which is going to make everybody say, F it, we're going into Bitcoin. Okay? That, in my opinion, is what would lead Bitcoin to really give you your parabolic move, where it was back in the day before the big bull run, where Tesla purchased Bitcoin and it just shot up. All right? I'm telling you, Bitcoin's going to do it because I can guarantee to you that the way things are going right now with the economy and the indecision and the behavior from the Federal Reserve not getting it right, Trump's convinced there is no inflation and the Fed's projecting inflation. Now they're changing their idea of going over to the employment market rather than focusing on inflation. Like, come on. Yeah, deficit is going up and up and up. No one's buying bonds, ladies and gentlemen. Where are you? No one's buying bonds. Forget the price that it is now. No one's buying bonds. Okay? US debt is wild. All right? I genuinely believe that Bitcoin is going to come out and experience that move. Won't happen just yet. But you can see that everyone is positioning themselves for something like that. Let's just quickly have a look at where we are with the E's of the T's of the F. Here we go. 754,000, ladies and gentlemen, all-time high on the accumulation of ETFs. So it's institutional adoption. But, yeah, baby. Stablecoin reserves exchange soar to a record 70 billion. So that's consistent with getting ready for some buying. We know that. All right, so that's good news. Speaking of which, let's go and have a look at our favorite asset, Circle, that everyone seems to be attacking me for and why I'm talking about it. Why would I be buying it? Why not? You got the government backing of it. This bad boy was nearly offered by Ripple to buy out. Why would Ripple want to buy out Circle? Why? Tell me why. Because it's an issuer. It's a bank. It makes USDC. I'd invest in the bank. Well, that's what I'm going to do. So I'll be keeping you guys posted on that bad boy. Wait there. 123 funds are coming into play. I'm telling you, this is starting to climb up. Funds are going to keep on adding it, okay? And when fund ownership obviously exceeds management ownership, that's when we get interesting. But there's zero debt with this company, all right? It's going to be brilliant. I'm telling you now. I'm not, listen, I'm not boasting about, this stock because I just think it's great. I'm just using it on the basis of backing the idea that the US government, the Clarity Law, Genius Act, and all that stuff, it's all starting to come into play, all right? Crypto.com, Crow. I've told you guys, get involved in Crow because the trajectory for Crow in the future is going to be massive. Forget what price it is now. You're not investing in Crow because of its price. You're investing in the logic of what they plan to do in the future. Okay? That's my opinion. When I look to invest in something, I've got to look at the statistics. All right? There's nothing behind this company that says to me, okay, you should invest in it. All right, look, we can look at this right here and we can say to ourselves, all right, what's it been doing? Its sales are 21%, 21, 58, 53. Okay? They're making investments. There's going to be new things happening. I expect its price to come down. But this is the start of this new company, starting off where cryptocurrency is now getting ready to be adopted worldwide. It's not going to make parabolic moves straight away, but it's going to be a long-term play for me. Every time I buy it, I'll tell you, okay? But I'm waiting for FOMC to finish. Once FOMC is done, I'll make my first purchase. And that's it, all right? Not financial advice. It's common sense. Anyways, speaking of which, let's go back into order flow. Let's have a look at what's going on over here with the Bitcoin. We got ourselves the market opening in 7 minutes time. We had some big bids right here on Bitcoin. 62 million at 113,900. And this is it's a good thing and it's a bad thing at the same time. Okay. They're bidding so high. After such a big rally, they're on the assumption that they're bidding with this area here, 62 million at 113,900. That's not good. We really need Bitcoin to start marking up in favor of this dude right here. We've seen another order right here for 30 million as well. So that's quite a big order block, but why would you be buying at this point? Obviously, there's an expectation that Bitcoin's price is going to go up, and we don't know if he's actually sold in here, but we're looking at the order flow, and I can't really see anything. Well, there's 34 million to be sold up there, 114,600, and then you've got 35 million up there at 114,999. Taking that information and going over into where we are with open positions and order flow. So let's just have a look at this right here. So hypothetically, the logic of this chart shows me that open, or should I say open positions, you could assume that this could be an area of support, which shows you the 113,350. That's what this chart tells me. And the concentration of open positions, there's more inside of this area here, which shows 30.32 million in terms of open positions. Below that, you've got 21 million. Then after that, you just don't really have that many orders or positions until we get to this one at 13 million. Then you've got this big one down at 110, where hopefully prices are going to go down there. But you should welcome it. When it's cheaper, you get Bitcoin at a discount. But the one chart that I am going to be paying attention to is this open interest one right here. So what we got? So Bitcoin, the next logical spot for open interest in terms of Bitcoin is all the way up here at 121,000. Before that, there's nothing really happening here. There's a lot of volatility, but it shows that this area here, and we've been talking about it all week, that this area here is showing commitment from traders in terms of open interest. They came in, they built, they played, and now price has made a move away from that. So that's good news for us right there. Let's just have a look at Bitcoin over here on this chart. So if I just, whoa. Where is the, let me just refresh this. Let me refresh it just to make it a little bit clearer and easier for me to navigate, because it always does this to me. Here we go. All right, then. So this is where we are. So open interest, yeah. So we are starting to see a lot of interest coming into play. This area here was quite a significant area as well. We try and reduce the amount, so I got only bigger orders. Yeah, there's lots of open interest coming into play right now in the marketplace. The brighter it is, the more open interest there is. The darker it is, the less open interest we got. So there's activity happening right now on the book, ladies and gentlemen. Quickly going over and looking at the liquidations over here for Bitcoin. So liquidation delta, right? So there's not that many shorts, but longs have started to open up here. So they're getting liquidated. And you got these guys down here with some longs getting liquidated. You got big liquidations down here at 110,850. Let's go to price action just to understand where we are with Bitcoin right now. So Bitcoin's pulled back. It's come down and swept the Asian session range. Let's go to Ethereum just for a second. What the hell is Ethereum doing? It is treacherous today, ladies and gents. Just be careful. Solana's the only thing that's got common sense in its movement. It's not really doing too much, which is good. Let's have a look at Bitcoin futures right now. So we don't really have anything. Well, it is open. Yeah, it's not really getting ready to move just yet. We've got some big break into the vector candle recovery zone. I just want to go over and have a look at where we are with the VIX. The VIX is trading negative, okay? But the CME one hasn't been printed just yet. Let's go to the VIX. Yeah, it's just opened up in a split second, not too long. Yeah, the VIX is negative because the NASDAQ is still holding out on its gains to the upside. They're pricing in the idea of interest rate cuts. So just be very careful with this open. Please unban from Discord, Bredex. I don't know why I got banned. Bradley, you probably got banned maybe because you weren't active and the bot just gets rid of you just like that. If you don't have a reason for knowing why you got banned, it's probably you might not have been active and it kicks you out for some reason. If it is, mad love, I'm sorry about that. It does that. But just go reach out to one of the members, the moderators in the Discord, and it should be fine for you right there. Okay, Tino, where can we see open interest data? Can you please share the website? It's High Block. It's High Block. I am not a bold villain. Do I look like a bold villain? Anyways, dollar dominance is something you want to pay attention to. Oh, God. Look at this nut job. But that would explain why, because Euro right now is making a bit of a move to the upside. Lagarde said, hold on a second, money markets pricing a 50% chance of a 25 basis point ECB rate cut by June from around 60% chance before the ECB statement. They're cutting again. Oh, my God. What on earth are they doing? Why are you cutting again? God, 25 basis points. It's going to go down to like literally 1% nearly. That is wild. Unbelievable. Japanese yen. Let's have a look. 10-year bond market not really opening. Yields still going up. 10-year futures spiking up and down. Look, the open is going to be phenomenal, ladies and gentlemen. Let's just keep an eye on it. Here we go. So this is an index. So I've got the NASDAQ, the S&P, and the Dow all together, the futures, okay? And this is where we are with it right now. Not really any movement just yet. It's going to be opening in a second. What? Tino, I'm not Mexican. No, I'm Greek. Why did you cut your hair? Irrelevant questions, ladies and gentlemen. Irrelevant. Here we go. NASDAQ coming into the open in the next 10 seconds. Let's see how the market is going to fare at this open. We're going to know exactly where we stand with it. Here we go. Bitcoin pulling back down, and you'll find that there's this disparity between cryptocurrency and the NASDAQ. NASDAQ goes up, cryptocurrency goes down. Cryptocurrency goes up, NASDAQ goes down. Here we go. Here we go. Now they're going to start reacting. This is where the market goes absolutely crazy, and it's treacherous for anyone that trades it. Don't waste your time. But if you were an adrenaline junkie, be my guest. But I've got to keep an eye on my blood pressure. I've already had to shave my hair because of the stress of holding XRP has caused me. But never mind. That's another story. Okay. Cutting. I thought Japan was going to raise rates. Yeah, Japan's going to raise the rates. They are going to raise the rates. They're going to raise it. And that's why, look, there's only a number of things that can impact the marketplace right now. Rate increases by Japan. Fed pivot, all right, where the market will then correct. Everything is so overvalued, man. It just doesn't make sense for anyone to be buying. Warren Buffett sat on $365 billion worth of cash. He doesn't care. He's not buying anything because he says everything is overvalued. Doesn't make sense. Let's see if the market's history does really behave itself. Nightclub analogy today. No nightclub analogy. You took scalping too seriously, apparently, man. Yeah, I took scalping very seriously. Just want to have a look at Solana. You know what? Whales are in accumulation of Solana. We know this, okay? But this should make sense. Hong Kong proposes easing capital rules for banks holding Bitcoin and crypto. But you know what? We get this information all the time, all right? We hear that someone says, yeah, we're going to ease this, we're going to ease that. Bitcoin's price goes down. Of course it does, because they're buying it, all right? Here we go. Solana, the absolute monster. Look at that. Bitcoin's coming back up. It's a very treacherous time to be trading. What you got to wait for, guys, in my opinion, is you have to wait for a significant move to occur. You're all gambling when you're taking entries in this range right now. You are, because it's not making any sense. Bitcoin is exactly where it was 5-6 hours ago. So how do you make sense of direction where it is in exactly in the same spot that it was? Yeah, we got a green vector candle recovery point right there. Okay, cool. Is the NASDAQ doing anything? Go and have a look at that. NASDAQ is making a move up, taking that 24,000. Happy days. What's gold doing? Gold has just moved up to only move back down again. So if they're really pricing in the rate cuts, gold's price should be making another all-time high. But market's only been open for 2 minutes, so it hasn't really just digested everything. Oil's taken a slump to the downside. Nice little play up there. Didn't really hit TP, but we did all right on that one. But the SPX gapping up, so that's good news for us. No. Copper's holding out. USD JPY is pulling back. Aussie yen. I want to see Aussie yen climbing more to solidify Nasdaq's move to the upside, because I feel like they're engineering something here. They're going to try and manipulate something. Scalp the cap. Okay, where did you go? Everyone's good. Even Steve. Even Steve. All right, then. With that being said, real question, why oil down? Well, OPEC's increasing the supply, all right? Which ironically happens to be around the time that China's consumption of US oil has increased massively in August. Tino, I think you should do a whiteboard video on the model and different timeframes. I feel conflicted. What model? What model? What model are we talking about? What model are we talking about, ladies and gentlemen? Listen, we're gonna do the whiteboard stuff. I think I'm not gonna do a whiteboard session tonight, because I think today is going to be a very interesting day in the market. I actually believe, but we'll see about that. But if everything is overvalued, why is holding fiat a good option for Warren, given that fact that it's losing its value against tangible assets? When Warren Buffett's sitting in cash, it's only going to be for a short period of time. So is he going to run the risk of buying everything at high valued prices, or just sit in value right now or in cash, chuck it into a specific savings account that he has designed himself and earn interest from several banks, okay, and wait for the time to start putting the money to work? Because he's not interested in losing value over the next 5, 6, 7 months. He's interested in what he can obtain in the next year, 10. Well, not that he's getting on, good old Warren, but, it's his predecessors, how are they going to manage it, So I don't think he's too concerned about losing value on fear. The purchasing power of the US dollar is negative 98%. So he's obviously been accepting of that. And with $365 billion, what's the interest rate? You put 55 million into a bank account, you earn about 16,000 pounds a month interest. I don't even know why the guy even bothers buying anything. Just put all that into interest. But he's got big plays in Japan. That's something. Japan increasing interest rates. Yield over there is looking good. Maybe Japan's the next play. All right. With that behind, what? I mentioned good news for alts with Bitcoin dominance going to 70. That sounds ugly. Yeah, right now. But I'm saying to you that in the future, if we get a catastrophic event from a financial perspective, Bitcoin is going to go to 70%, because people will then cotton onto the idea of how good it is. All right. And then they're just going to keep on buying Bitcoin. Everyone's going to rush to buy it. That will be the gold rush of Bitcoin. Your alts will be dustbin, ladies and gentlemen. They really will, because people will just flush to Bitcoin. So that's my logic. What is the NASDAQ you use called, Tino? This is the micro E-mini NASDAQ index futures. Index futures, right? Then you've got the composite index, okay? This is all of the NASDAQ, everything in the NASDAQ stock exchange. It's on this chart here. That's why they're different prices, okay? This is the futures of the NASDAQ, all right? Cool. With that be blue vector, red vector strategy at the top and bottom. Thank you, Tino. No problem. With that being said, ladies and gentlemen, mad love and respect. I'll be tuning into you all later on tonight. Please trade safely, because this is going to be a very interesting show today. All right? Take care of yourselves, gang. They've already priced in the rate.